Hello, Mark Rogers here. Welcome to the Two Room Schoolhouse. It's a pleasure to be here with you each and every day, educating on things. We got a topic up on deck here that is near and dear to me, and that is long-term care. There's a lot of misnomers around long-term care. I have been a certified long-term care specialist since 2008, and I've seen a lot in the last 12, 14 years now. And so I wanted to share a little bit about that. There's four key tasks to be looking at when it comes to long-term care, trying to button it down here for us. So let's just jump right into, there's the class right there. Let's just take a peek and see what's going on here. We're going to start off with a pop quiz. And so this little pop quiz, it's good to see what kind of, where our understanding is around long-term care. And so let's just get a pen and paper out. As you know, if you've been on any of my classes, you know I'm a fan of taking notes along the way. So the long-term care quiz is as follows. You know, the first question is percent of Americans over 65 who will need long-term care. Pick one of the numbers. We got three choices: 3%, 8%, or 70%. This is, again, the percent of Americans over 65 who will need long-term care. Pick one of the numbers: 3%, 8%, or 70. And now question number 2. Percent of Americans who think it is very likely they will need long-term care at some point in their lives. Wow, interesting. They took a poll and found out how many people would think they would need long-term care very likely in the future. And the last question, question C, percent of Americans who have long-term care insurance. Again, 3%, 8%, or 70%. So let's get to the answers. It's a self-grading quiz. So the first one is those that have a percent of Americans over 65 who will need long-term care, 70%. It's a large number. The joke I always make about this is, you know, people say, I'm not going to need long-term care. Well, guess what? It's something that you will have long-term care. 30% of us will not, 70% of us will. And so the next question is the percent of Americans who think it is very likely they'll need long-term care at some point in their lives. 8% is the answer. So there's only 8% of us that think they'll need some kind of long-term care in the future, while at the same time, the government has the statistics that 70% of people over 65 are requiring some form of long-term care. Last question. I hope everybody's doing right on their tests. The percent of Americans who have long-term care insurance, a measly 3% have long-term care. So I hope that's interesting on the pop quiz. Let's move forward. Getting your long-term care planning right. I think this is very, very key. Again, I'm going to go over 4 key thoughts or tasks or myths, whatever they may be. We'll get right into them right now. But before we do that, the problem is when you plan for a safe and secure retirement, long-term care is confusing, and really most of people never address it until it's too late. So people understand kind of like the basic ideas of it, that needed some kind of care, but certainly I tell you what, it's been put on the back burner. So why are so many people not planning for this issue? There's a lot of reasons people come up with. I've heard them. It seems remote, too far off. That's down the road. It's a very stressful subject people don't want to think about. I've got a good financial plan. My financial planner says I can cover it. That is an interesting concept. It's a stressful subject people don't want to think about. And maybe they think, Medicare, doesn't Medicare or Medicaid take care of it? Or my family's going to take care of it. You know what? It's just too expensive. Planning is just too expensive. That's another one too. And, if it comes up, I'll just pay for it out of pocket. Okay. And then, of course, long-term care won't be needed, There are large percentages think that we just won't need it. So let's move on to it here. Long-term care has an emotional component to it too. We're not going to dive necessarily too deep into the emotional side of it here, but it is a tremendous thing. If you want to get more information on the emotional impact of long-term care, check out Alzheimer's website, alz.org. And we are seeing interesting trends in the unpaid caregivers. The unpaid caregivers being the mother, the spouse, the daughter, the sister. These are the generally females. 80% of all caregivers are females. They're unpaid. Tremendous emotional, financial, or it's an emotional thing that's happening to these folks. Their health is dragging down. So whatever happens, I just don't want to be in the nursing home. Great, that's fine. We're not talking about the nursing home today. Long-term care, key number one that we want to look at, key number one is long-term care isn't about an elderly person alone in a nursing home. It's a range of services designed to help people with health and personal care needs. And you know something interesting? Most care goes on in the home. It could be your own home. It could be a child's home. It could be a neighbor's home. Whatever it is, it goes on the home. That's where care is being done. The question is, are we planning to have that care done in the home? How does that look? So you haven't exactly, if we haven't defined exactly what long-term care is real simple. You see them right there on the screen: eating, dressing, bathing, continence, transferring, toileting. Yeah, I've said that a few times over the years, but you see them on the screen: bathing and dressing and eating and transferring and toileting and continence, hands-on versus standby care. This is if you fail two out of the six, then that is going to qualify as an extended care or long-term care situation. A cognitive impairment is another aspect as well. Cognitive impairment. So this is a very, very easy definition the medical professionals are able to do as to if someone is needing some kind of extended care if they can't do two out of those six. So who really is needing long-term care? We said earlier there's expectation that only 8% of us think that we're going to have long-term care at some point in our lives, but the reality is it's nearly 70%. And again, that's a government statistics. You can check out on that over on longtermcare.gov. So that's the answer to the questions from our quiz, and it's the reality of it is too many people are living in a bubble and not planning for the future when things get bad is they haven't planned correctly. And so I guess I want to reiterate the fact that the government sees this as a problem, and you can track it over on Alzheimer's website, alz.org as well. Dementia is a tremendously growing problem in the country. And so this is fundamentally requiring us to do some kind of care planning. It's provided in a variety of different settings: at home, in the community-based care, independent living, assisted living. Nursing home is the last, and again, nobody wants to go there. And of course, we have the cognitive types of impairment facilities as well. That is very, very critical as well. So it's a variety of different places where the care is being given. One of them that's not on the list is adult daycare, and that's becoming a bigger thing too, where a child may have a parent that they need to drop off for the day just like you would a child, and the adult is being taken care of during the day. If the responsibility is falling onto the daughter, for instance, that gives some relief for while they're working. So while being cared for at home in declining years is one of the most common ways long-term care is provided, relying on just extended family and friends is no longer the only option. I've talked to many couples, and they live here, and then all of a sudden one kid lives in Washington, D.C., and the other kid lives in California. It's like, how is this going to work if we're relying upon our children particularly? So fortunately, one may receive many services at home in the past were provided just by family. These services are doing what the family used to do, and these services can accommodate various levels of needs, visiting nurses and doctors who provide medical care, other support services like Meals on Wheels, necessary medical equipment that can be used at home, and case managers to help monitor the needs of the person receiving home-based care. So it is quite a system now that has developed specifically taking care of people at home, and there's a variety of different services that are going on for that person in need of care. So while care in one's home is sometimes called community-based care, there's programs outside of one's home that can supplement the care receiving in their home. And so, maybe there's respite care for in-home caregiver. Respite care is basically that time when, mom or wife or husband even, says, I need a week away to go golfing. I need to go to the beach. That is called respite care to help recoup the mind and get away for a little bit. It's an absolute critical thing to have respite care. And then, of course, independent living, as the name indicates, those living in independent living settings, these facilities, as you know, are popping up everywhere. A lot of growth going on in this particular development of assisted living. And you can find these places more and more growing. It's a corporate business now, and it's worthy of looking at that as an alternative as well. Assisted living is an example, something in the middle, where the resident may need help with daily medications, dressing, grooming, but can still perform some of these activities on their own. And if one's need to help with activities of daily living exceeds what's possible with added services, as one continues to live independently, stepping up to assisted living is the next step. So this is definitely a step up, if you will. And you can find more information on whereyouLiveMatters.org, whereyouLiveMatters.org. There's a lot of resources that I'd like to share with you along the way. But as one might imagine, the costs for all this care can be significant. Medical costs in general keep rising. You think groceries are going up, medical costs are going up, especially for retirees and their health care needs increase. In 2021, the average 65-year-old couple would need $300,000 in today's dollars for medical expenses in retirement, excluding long-term care. So that number you're seeing on the screen there on the left-hand side, that is that is a piece of research that's being done every couple years. I believe it's by Fidelity, and we're watching that, and it excludes long-term care. As for individuals, the number is $150,000 for women and $143,000 for men. So that's up 30% from 10 years ago. So that's the key thing we look at. And of course, are those median national numbers. There are many places where the costs are far higher. For example, in the New York City metropolitan area, the median cost per month for assisted living is almost $6,000 for a private room, and a skilled nursing facility is $12,000. Almost $13,000. So half of the options in New York area cost even more than this. And I would say for big pockets like, say, Seattle and Portland and San Francisco and LA, you would see the same thing too. And I do have, when I work with people, I do show what the cost of care is in your area because I have access to that. So you may be thinking now, it's good that these are feasible options, but they're beyond just a nursing home. They seem so expensive. Won't Medicare, Medicaid cover this if my needs are really serious, right? So that's a lot of people. What people actually ask is Medicare or Medicaid. Well, the second key, if you're taking down the keys, the key is Medicare or Medicaid don't count on it as a plan. It is not part of what they call custodial care or extended care. Medicare is a skilled care system. Long-term care is a custodial care system, so don't rely upon them. They're two mutually exclusive care situations. In the next few slides, we're going to explore the misconceptions about using Medicare and Medicaid for paying for rising long-term care. It's worth noting that some states are currently studying how to reform their long-term care programs. In Washington State, we just went through that. If you are working or if you're employed, there is a payroll tax starting here July 2023, unless you exempted with a long-term care plan like I have. And so, yes, the states are looking at this one at a time to bringing this down as a payroll tax, more or less, for working folk. So if you're retired, that's not part of it. But if you're working, that could be a possibility that you're going to be taxed. Many people incorrectly believe that Medicare will cover their long-term care costs. As good as Medicare is, long-term care is not covered by Medicare, which only covers short-term rehabilitative care. That's rehab care that's less than 90 days. And if you are covered by Medicare for rehabilitative services, it's important to understand that Medicare only pays for certain short-term services like skilled nursing and therapy. Speech therapy, physical therapy, all the therapies, right? But does not pay for custodial care, the kinds of help that you need help with those daily living activities of daily living. So it's important not to be surprised. Now, Medicaid is not Medicare. Medicaid is a state and federally funded means-tested poverty assistance program, and it may cover long-term care for eligible individuals. In other words, you have to be impoverished to get on Medicaid. Now, many low-income Americans use Medicaid to pay for long-term care, as Medicaid does, in fact, pay for long-term care services that Medicare does not. But this is not all you know about Medicaid. You can be in for some very upsetting surprises as we go to the future. Medicaid surprise number one is a key surprise is finding out that you must use up almost all of your assets first to pay for your care. So this is a situation. If you have no long-term care strategy in place, and now you have a situation to which you turn to the state that you're living in, then you'll find out that, again, it's going to differ from a little bit from state to state, but you're going to have to spend down all of your assets down to $2,000. You do get to keep a home generally up to a certain value limit, but that is incredible because the state now is involved with your plan, and they're going to put liens on the real estate, and they're going to have you spend that down before the state will help you in the Medicaid scenario. And if you've exhausted many of your assets, you approach the need for long-term care and your income is low, what's known as the look-back period may qualify you. I can't tell you the number of people that say, oh yeah, we're rotating assets over into our kids' names. Well, don't be caught with the look-back period. It can be a dangerous thing as you sending the money out of your name, and you find out that there's a care situation comes up. Now the state looks at you and says, aha, you're trying to beat the look-back period. Even if you don't qualify for Medicaid, you may still have a rude awakening. There's a significant shortage of the Medicaid beds within long-term care facilities. Not every room or bed in a facility will qualify for Medicaid payments. So, just because you qualify for Medicaid doesn't necessarily mean there's going to be a bed either. There's long wait lists as well. I also want to pause for a moment too. If you're in the VA system, if you're thinking to, if you're a veteran, it's not a pretty situation otherwise too, because of all the baby boomers coming through that are veterans. They too are clogging up the available beds going on as well. So we're caught with this dilemma of having a shortage and wait list for rooms, and the issue of being forced to move to a different room will become even more significant and common as baby boomers age. By 2030, all boomers will be 65 or older, making 1 out of every 5 residents of retirement age. This is my main goal right now, is to help as many baby boomers, because they're coming through right now. You're all coming through. The last one, 1964, was born in 1964, but we have a massive population of baby boomers coming at us right now, which is really going to cause some issues in the care situation. Even if your retirement plan looking for future non-long-term care medical expenses into consideration, you can see how long-term care expenses can eat into your planned annual income. Again, this is a big deal. People may think that they say, oh, I have plenty of money, but that money should be used for income, and should be used for the surviving spouse as well, right? So that's a big deal. If the first spouse goes down with a long-term care situation, the surviving spouse, who's now left alone, possibly after the passing, now is not left with any assets. So now you've heard a lot of long-term care isn't a good deal at all. So are there any options, right? Maybe you have heard about long-term care in the past and you thought, oh man, that is just unreal. Those older policies, that is true. These older policies are quite problematic, right? Given historic problems, long-term care insurance, it's understandable people have been making. You've been hearing horror stories of the policies that were sold in the 1970s. And even in the 1980s, you were hearing about them. Well, that is true. And that is true. But there's some things going on here. Let's talk about some of that original long-term care insurance. People that it was conceived back in the 1960s, right? And it's quite possible you may have had a loved one purchase what we'll call first generation long-term care insurance, and you may through them have led some bad experiences. I've heard them. I've heard the bad experiences of these first generation policies. This insurance was first introduced in the late 70s, though it didn't really catch on till the late 80s and early 90s. At the time this original long-term care insurance was introduced, there's really two options of receiving care: nursing home and at-home care services by loved ones. That's the only two options. Concepts like that adult daycare I was talking about and assisted livings were foreign to most people, and those policies wouldn't cover it back in the day. During the 80s, the options for care started to expand, as did the demand for those original long-term care insurance policies. It provided a good option to one of the most common ways people paid for their costs at the time by selling their home. So many insurers got into the business because it seemed like a good one. So again, those old long-term care policies have come, and people have died off, and so we don't find too many of those too much anymore. But we see for those that are still surviving, there are some skyrocketing premiums. Yes, they are. Refusals to qualify policyholders for care, refusals to pay claims, policy cancellations. We've heard it all. We've heard it all about these older long-term care policies. And fortunately, when I got in the business back in, like I said, 07, 08, and became a certified long-term care specialist, the newer policies were already up on deck. And so long-term care insurance has improved over the past 25 years. There's been a lot of regulation over this, by the way, a lot of regulation. A series of legislation that now the coverage provides for all forms of dementia, including Alzheimer's. Cannot require hospitalization in order to qualify for benefits. There was little loopholes there with Medicare. Can't do that. Cannot require that skilled care be needed in order to pay for custodial care. So made language under which claims can be made clear, and they do all underwriting up front, no post-claims underwriting. And the premium increases have been regulated as well. While these regulatory changes made newer LTC policies more appealing to consumers, the changes were not retroactive. This means that the older policies without these protections are still out there, still causing the problems, still giving the bad press. So you may be starting to get the idea of planning for long-term care almost seems futile and out of reach. We've talked about the expensiveness of providing the care. We've talked about the assets at risk. We've talked about the family members at risk. But there's actually good news. Because of those historic challenges around long-term care, there's been a lot of changes in recent years, and there's good reason to feel hopeful about long-term care challenge. And this brings us to the fourth key. And the fourth key is there's new approaches to planning for long-term care, address people's skepticism, provide a wide range of flexible options for people at all stages of financial planning and health. And I'll give you a little heads up on something too, is these long-term care policies are starting to incorporate and looking into how robotic care will be in the future as well. So robotic care is a major push on that right now. And so these policies are looking at all types of care for the future. These newer approaches for planning for long-term care are as varied as people need them. So whether you're way out in the middle of the rural nowhere or in the middle of the city, the care options will be met, providing a wide range of flexibility. And they fall into a few different categories. Improved long-term care insurance, long-term care options on life insurance and annuities, and other financial instruments and assets. So we're going to take a brief look at these here as we go along. As discussed earlier, regulatory changes led to improvements in traditional long-term care insurance. So that traditional, I call it health-based. I use the word health-based because that means it's just like renting, or just like mortgage insurance or rental insurance or car insurance. You have to qualify on a health basis. And so you pay a premium for a future claim that is the value of that is generally growing, right? There's no benefits outside of long-term care coverage, though the details of the benefits vary from policy to policy. And so they frequently have cost of living protections, so the benefit will increase. That's a good thing too. Always having the benefit increased. And then we have the next category, life insurance and annuities with long-term care benefits. And I call these asset-based because life insurance and annuities are technically assets on your balance sheet. Now there are specific life insurance and annuities that have long-term care components on them that make them very valuable to do another additional thing. You may have the life insurance and annuity to do one or two other things already, but now long-term care is now added as another option that those tools can be used as well. And then there's other financial strategies to leverage for long-term care as well. Let's take a look at a few of them. So reverse mortgage. Reverse mortgages, a lot of people's assets are all tied up in their house. A reverse mortgage might be a fine option to pay for long-term care. One downside of a reverse mortgage is that you're potentially using up the equity in your home, which doesn't include benefits like tax benefits, as loan proceeds are generally not taxed. And when the home is sold to repay the mortgage, if the proceeds of the sale are less than the mortgage, the mortgage company has to take the loss rather than being able to go after the other assets. Usually means that the homeowner cannot pass on his or her home to heirs. I would say I don't do reverse mortgages, but reverse mortgages can be a powerful tool. And one thing that is incredible, though, is that in its nice thing, you have to live in the home as that has to be happening. So if you move out of the home, the reverse mortgage is going to be called. Then we cash in on existing life insurance policy for living benefits. Many don't understand that if you currently have a life insurance in place, that would be a valuable asset that may be converted for long-term care. So for those over 65, selling a life insurance policy to a life settlement company for a percentage of the death benefit is one option for funding long-term care. If you have a life insurance policy, you say, I don't think I need the life insurance policy anymore. There are ways. There's corporate maneuvers now that are being used to have those pay for care. Or if your policy may offer accelerated benefits to pay for care that are terminally ill. So there's a lot of policies now that have been sold in the last 10 years, 15 years that have tremendous living benefits, and long-term care, chronic illness type riders are sitting there. Now, you could use pre-tax savings too, like an IRA to purchase LTC protection. And retirement assets can be surprisingly substantial and a good source for LTC needs. Using a Roth IRA conversion of a portion of a traditional IRA or a backdoor Roth IRA contribution can help create funds to pay for long-term care, as Roth IRAs can grow tax-free and are not subject to minimum distributions. So that's a powerful thing to say too. Now, one thing I want to stop a moment. If you think you're going to use an IRA or 401k or 403b, 457, whatever the government, the tax qualified account is, remember when that gets paid out, and this is a calculation I do with people, if you're paying it out and let's say you need $100 to pay for care, the question on the table for you is how much dollars do you have to pull out of it before you pay for the care services? Depends where income taxes are. And the income taxes, I believe, are going up, and they're going up substantially. So you may have to pull $130 or $140 to pay for that $100 tab. So that's a difficulty with using traditional IRAs. Now, there are some other things to do that I have used with traditional IRAs, but that's for another time. So long-term care and disciplined funding of a health savings account is another way. So if you have an HSA in place, then that's another way to pay for long-term care as well. So every one of these strategies is got its drawbacks and pluses and minuses, right? So that's really what it is. So I just wanted to share with you, just kind of do a little recap here for us as well. And I think it's important to see. Let me just do a little double check here, and let's just do a little of this. And I'm going to show you a key thing that I do with clients, and just get the pen working here. And I just wanted to go over. So I just want to go over some of the things that we were just looking at there so that you can see what's going on here. But basically, to solve long-term care solution, we're looking for a solution. We talked about a lot of different things here. And so one of them is what they call a health-based LTC policy, right? We talked about that. We also talked about an asset-based LTC policy. And actually, these will come in a couple different flavors. I'm not going to go into them now, but they do come in several different flavors on an asset-based policy. And then we talked about home equity, right? So we talked about home equity being another option as well. There is also, you can pre-purchase long-term care services as well. I've got a service that does that as well. Pre-purchase those. And then there's another one that you can use your current life insurance contract. You can use your current life insurance contract to pay for care. And then another one that we didn't talk about as well is actually if you have a current annuity, you can do what they call a 1035 exchange. You have a current annuity that you're not using, you can use that and take advantage of the Pension Protection Act. It's a government legislation that happened that allows you to take all the gains and be tax-free with that as well. So, and then in some states, there's also something called short-term care. It's up to 1 year, and it pays for care in up to 1 year at home. Very affordable, very effective, but you have to check into the states because there's 31 states that have those available now, and they are a growing business. So I hope that this helps because the long-term care solution is not anything that is easy to understand without working with somebody like myself, where I sit there and we talk about these things and find out what is the best way to solve this problem before problems really happen and the stresses happen. And I also say this too, that care planning can be done at most any ages. Now, I will say if you're in your 40s and 50s, you're going to have the most options to be able to look at, right? You have all the options to look at. The 60s, the options starting to come off the table, still strong options, but some of those options are coming off the table. By your time in your 70s and 80s, the options that we're dealing with now are becoming more and more limited as we go on. So I think it's important, one financial planner asked, why do I have a long-term care policy? And I was 38 years old when I picked one up. It's because I wanted to take care of it and pay a very small premium for my wife and I so that we have a policy that if I need care at home, I'm not stressing the family out at that time. So let's move on and talk about and give you a couple different options here. The options are, if you would like to have a question to me, there's a link down below, and I'm always happy to help review to see what's going on, particularly if you have a long-term care. Maybe you have a long-term care policy right now you have a question on. Feel free to connect on that and give you an idea there. But at the same time, there's a lot of different options to look at. If you'd like to be able to plan so you don't stress your kids out and or stress your spouse out, and make sure your spouse has something to work with after one of the two of you goes into a care situation, it doesn't upset the apple cart too much, let me know, because I'm always liking to be creative. Someone wants to learn, I'm happy to be creative and looking figure that out. So with that, it's always good to be in the class for a little bit, and Well, the class is just ending up. I appreciate you stopping by, and we'll catch you in another class, and you can ping the link below.